William Lee joins us now, Chief Economist at Milken Institute. Billy, let's start with Greenspan 101. Is China in their slowdown going to export disinflation and deflation?
Well, China can't export much of anything right now, but I hope what they do is disinflation for the rest of the world. Right now, China's recovery has really faltered. We can see that not only is manufacturing down, but it looks like the consumption is on its way going to go down as well, with unemployment rates at 20% for youth unemployment. So China's not in good shape right now, and I think we are looking around and seeing what is going to pull China out of the doldrums.
What is the degrees of freedom an autocracy has Sunday afternoon, New York time, when they're supposed to provide stimulus?
It's pretty limited, right? Because not only is the federal debt out of control, the municipal level debt is out of control. So the general channels for fiscal policy have been through the municipal governments to try to hire more people, build more projects and stuff like that. Well, right now, they can't do that. So the amount of fiscal policy that we have is really limited. And monetary policy, I mean, you can lower rates, but people are just going to, stay there and not borrow, because they're going to ask themselves, where am I going to spend the money in order to make money in the future if the demand is so slow? So China right now is snowballing into a fairly bad static plateau.
Static plateau that's been priced in or not, Bill?
I think one of the things that we have to look at is where is it being priced. One of the things we talked about at the Milken conference that just ended a month ago was that a lot of the investors going into China go into private markets, and we really can't see a lot of that. But in order to get into the private markets, one thing that everyone made clear was they needed good Sherpas. They needed someone to guide them through to find good investment opportunities. And a lot of the investors claim they've got some good Sherpas there, and they're getting good bargains because the slowdown is affecting valuations both in the public and private markets. But the real question to ask is, will you get the kind of returns you're hoping for? And there I have my doubts, because the demographics are working against them. And on top of that, the possibility of technological change, which would be the one thing that boosts the Chinese economy, is also not going to be there, because policy has been really anti-innovation, anti-technology, and it's hard to see that changing.
Which is, John, what you were pointing to when you were taking a look at the tech indexes over in China versus the tech indexes in the U.S. and that huge bifurcation between the two. Bill, that's maybe on a domestic level. What about internationally? Has this been priced in terms of the impulse that China had on Europe? We were talking about the euro and how much it's come off some of its earlier highs.
Well, the renminbi right now is weaker than it's been for God knows how long. And so in that sense, it's being priced in. But for me, the FX market is very short term. The real question is, are investors pricing in growth opportunities over the next 5 years? Are they putting the marginal dollar into China, or are they putting it somewhere else? And I think more often than not, they're looking somewhere else.
Bill, you've got a great ability to move away from the Pacific Rim and the three cities we focus on all the time. What's the rest of China look like with the unemployment rates that are being reported?
That's a great question. Up until now, I would have said the prospects for any kind of innovation, any kind of employment growth are going to come out west, because the Milken study for the greatest performing cities in China landed on Chengdu as a small innovation hub. And we still stand by those numbers. But unfortunately, these numbers are getting dated. And right now, I'm not sure if even out west, the innovation hubs will be able to give the kind of employment that they hope for.
We've been here before. And the answer is Beijing always blinks and moves away from a totalitarian mindset, the autocracy of President Xi, and they move to some form of liberality and capitalism. You're saying it's not going to happen this time? See, he's pointing this way. On radio, you can't see that. Professor Lee is, I got to duck because the chalk's coming in.
Tom, President Xi's blinking is going to involve maybe a slightly different wrinkle. He's going to rely on nationalism, perhaps, some militarism, some expansion of hubris into the rest of Asia, because after all, he wants Asia to be the currency area for the China and for the renminbi. So I think these are the kind of places we should look for any kind of resuscitation of Chinese nationalism, which is they're going to try to instill pride in the Chinese people without giving them jobs. And that's going to be a cute trick.
Well, what does that mean in terms of international business? And I say this as JP Morgan has their conference and plays nice, albeit in a brilliantly diplomatic, pro-American, but also pro-China kind of speech by Jamie Dimon. How much can you really see a decoupling or a willingness to exacerbate that on the Chinese side in light of the economic challenges?
Well, Lisa, we have a love fest by U.S. CEOs going back to Tim Cook and now Elon Musk. And Jamie Dimon is very slick in being able to say, I'm a true American. I really am a patriot. So when you vote for me, remember that, even though I'm asking you to come to China and support my people. And I think going forward, we're going to see more of that, because the question is, the people who are in China have to maintain their business and really contain what they've gained. But the marginal dollar, the investors sitting here in the West thinking of going to China, what are they going to see? And I think they're going to see a lot of opportunities in ASEAN, in Korea, and in the Quad countries surrounding China, because that's where a lot of the innovative industries are moving to.
I want to end the conversation where we began, where you're talking about sort of a stagnant plateau. What is that stagnant plateau in China? What is that rate of growth that's going to be the new normal and going to drive demand for the luxury goods that have gotten bid up, for commodities that have surprised a lot of people to the downside this year?
Well, Lisa, the official number is a 5 handle for growth going forward. And I think you're going to see more likely a 3 handle than 5. So I think that's the kind of order of magnitude you're thinking of, because with population stagnant, any kind of massive productivity growth can't get them above 3.
For obvious reasons, Bill, market participants are going to be very interested in the next move on stimulus to get the PMI back above 50. As you know, that's not what the leader of the Chinese Communist Party is going to be focused on. They're going to be taking a multi-decade view. And Bill, I'm far more interested in the kind of fiscal moves that they make to stimulate more investment in certain parts of the economy that are going to be highly competitive with the United States and Europe, particularly as the US retrenches and refuses in some parts to do business with the Chinese government. Now, Bill, what are you focused on with regards to that?
Well, absolutely. In fact, if you look at where the Chinese are meeting and where they're not meeting with Defense Secretary Austin, so they don't want to talk military, because we know what they're going to do there. It is not very powerful for the U.S. But I think the place that they're meeting with is Gina Raimondo, the Commerce Secretary. They're hoping to leverage some action on the tariffs. They're hoping to leverage some action on cutting the semiconductor restrictions, and their information blackout is going to leverage what our investors actually see. They're going to shape the story for global investors to be so wonderful that that investors can't resist coming. But in order to do the due diligence, the required information to do the due diligence is something that's being restricted as we speak by the Chinese government. And going forward, I don't see that lifting.
That last point is so important, Bill. Clarity, transparency. How do I know what the unemployment rate actually is in China? Measuring it is hard enough, but when we hear youth unemployment, something like 20%, just how bad is it, Bill?
It is that bad or worse. And if it wasn't worse, we would hear more about informal data. But instead, we see companies like Wind being wound down by the government. We see due diligence companies like Bain being queried by the officials. So I think the Chinese are making it very clear: we're going to feed you the information you need, but it's from us.
Bill Lee of Milken. Hey, Bill, good to catch up as always.
Thanks,
it has been a tough year for the equity market over in China. Take the Hang Seng China Enterprises Index, okay? That is down by more than 20% from the peak. So we are in a bear market for some parts of Chinese equities, in fact, many parts. And you compare that to the NASDAQ this year, that wasn't meant to be the way this played out in 2023, Tom. It was meant to be very, very different through the equity market.
Off the COVID